Hello, I'm Barney Reynolds, a partner at Sherman and Sterling, the law firm, and I'm chairing our next session, which is on protecting, educating, and supporting consumers and customers. Um, I will allow each panelist to introduce themselves as they come to answer. So I'll kick off with a question, which is what's happening in open banking and perhaps open finance more generally, and what opportunities do each of you see? Perhaps I'll start with Nav.
So hi guys, I'm Nav Khan. I'm the third-party provider engagement manager for open banking at HSBC UK. A bit of background to myself. So I've been working on open banking now for the last 3 years. Primarily, my focus has been delivery of the open banking channel into our digital teams. This has included understanding the regulatory frameworks specified in the CMA and the PSD2, which I'm sure a lot of you would have heard of, and transforming these into user experiences, user journeys that comply with the standards set out in the regulations. More recently, I've moved into a new role, which I've just said at the start, which is TPP Engagement Manager. And this is more looking at the support we provide to TPPs and also looking at the commercial opportunities that open banking presents through the new emerging technologies that come out of our fintech organizations. Focusing on the UK itself, I don't want to dwell too much on the past, as I think a lot of people watching will know what's been going on. But open banking in the UK has been around for approximately 3 years now, primarily driven through regulation. And I think in the last 1+ years, it's seen good and healthy growth. And I think this is partly driven by the fact that the UK market is a mature market in terms of technology. When we first started open banking, phase one was, for example, browser driven. So it was browser based journeys. And also following that, we had phase two, which was app based journeys, so app to app, which improved the user experience, enabling biometric authentication, Face ID, Touch ID. And I think that's helped the ecosystem grow quicker in the last 1+ years. In terms of HSBC itself, as a result of that, we see in the region of around 90 million API calls a month. So volumes are healthy. And also for payments, we see approximately around 50 million worth of payments going through the API channel. So quite healthy growth in the UK. The EU market's slightly different in terms of adoption. You could say the UK had a slight head start because the regulation came in sooner. So the CMA order triggered this, and PSD2 landed in full effect, I think, last year. Also, the standards in the EU might be a bit more fragmented because there isn't a central body that can effectively manage all those standards together. But one thing I will say about Europe, you will find that they may have a stronger penetration when it comes to payments because they had pay by bank type use cases before open banking itself actually existed. And I think in terms of number of TPPs, from recent data I've seen, UK, out of the top three, I guess in the EU, UK I think is top, followed by Germany and Sweden, I believe, with the UK going into the hundreds when it comes to third parties. And I think the other countries are hovering around 50. So that explains the background to open banking. Currently in the UK, it's restricted to I guess payment accounts. This is due to the regs. So if it's under the CMA, it will be a current account or a business current account, personal business. And if it's PSD2, it'd be savings credit cards. Open finance work is sort of kicking off now. And I think what open finance, will enable is more use cases. It will allow the addition of new products which don't exist in the ecosystem today in terms of the APIs, which will be mortgages, loans, etc., investments. So I think that will be the next phase that increases the growth even further over the next few years. So that's a bit of background to open banking in the UK.
Thanks, Nav. I'm now going to turn to Tom, who's going to tell us a bit about what's going on in the US, Canada, and Australia.
Yeah, thanks so much, Barney, and thanks for having me today. I'm really excited to be a part of this panel. So Tom Carpenter, I run public affairs and marketing for the Financial Data Exchange, which is a industry-led collaboration that operates in the US and Canada. Got about 165 members across the financial services ecosystem that are really seeking to standardize the technical side of data sharing. And maybe I'll jump in from that standpoint. When you look across the marketplace, and I know Nav just gave us a good view of the UK and the EU, you've got a bunch of different approaches to open banking and open finance. In the US, we really currently, as of now, do not have an overarching regulation in place like other jurisdictions. Back in 2010, the Dodd-Frank Act that came out of the financial crisis did in place the CFPB in the US with the authority for data access and gave consumers access to their data, but it left a lot of questions unanswered. And those remain unanswered as of now. And so that's really where the industry has stepped in. And at least in the US, it is very much an industry-led approach at this point, which really puts the US more in the open finance set, because the industry standard is largely responding to the market needs and the set of accounts and data fields that are being defined by the industry are essentially matching kind of the innovation of where it stands today. In Canada, just north of us, I'm actually participating right now in their workshop consultations, which are a phase 2 of their open banking consultation. And Canada is really looking into a hybrid approach, industry-led standards, and yet some clear government guidance and regulation around who can share data and how they can share data, and some of the guide rails, if you will, for what standards can be. And that very much is in process right now. In Australia, last year, they enacted the Consumer Data Right. That has continued to kind of roll out in implementation to truly give consumers kind of access to the data and be very clear about their ability to move and share data among fintech. And so I think, at least in terms of today's panel, as we talk about consumer trust, consumer application, I think it's interesting when we look at these different events and all of us meet and have these panels. We're usually talking about the technical nuts and bolts of how this all works. The consumers just kind of expect for it to work. They expect I'm going to be able to download an app. Somehow, if it needs my financial data, that will happen. I'll be given the appropriate disclosures and notifications. And so it's connecting kind of that consumer expectation with, I think, what a lot of the different jurisdictions and countries around the world are trying to accomplish with the ecosystem and organization. So looking forward to talking further on that today.
Thanks. And now I'll turn to Sharon, in particular on open banking for good, which she's been working on.
Thanks very much, Barney, and thanks for inviting me here today as well. It's a great panel to be part of. So I'm Professor Sharon Collard. I'm a researcher at the Personal Finance Research Centre, and we're based at the University of Bristol in the UK. And I suppose our interest has been really around purpose-led fintech and open banking. And what do I mean by that? Well, I think purpose-led fintech is aiming to support innovative ideas for products and services that perhaps have more of a social purpose. So perhaps increasing financial well-being or addressing financial exclusion issues, which might otherwise struggle to attract commercial backing. And so as part of that kind of general interest, we have been conducting an independent evaluation of a programme called Open Banking for Good, which has been run by Nationwide Building Society as part of a bigger government programme called the Inclusive Economy Partnership. The Inclusive Economy Partnership is bringing together industry, civil society, regulators and others to address some of the big social issues that the UK faces. And so Open Banking for Good's role in that is to kind of create and scale open banking enabled apps and services for a very particular target audience, and that's the 1 in 4 UK working age adults. So that's roughly about 12.5 million people who we describe as being financially squeezed. So these are people who tend to be in full-time work, but they have significant financial commitments, particularly kind of credit commitments, and not much provision to cope with income shocks. And actually that's that figure of financially squeezed consumer segment is pre-COVID, so it's probably rather bigger by now. And so what we did in our evaluation was look at how the programme was implemented and how it ran. and the impact that it had on the 5 fintechs that actually took part in the whole program and completed the program. So I guess that's where we're coming from, thinking about the how fintech and open banking can, I guess it touches upon what Tom was saying, thinking about it from meeting very particular consumer needs that we've identified in the UK.
Thanks, Sharon. I mean, it's clear, therefore, that there is a huge opportunity ahead created by open banking, open finance initiatives. Very different, the contrast between the UK EU regulatory-driven approach and the more voluntary US one, and we'll see what happens elsewhere. Let's turn then to because it's quite clear that we're at the early stages of this rollout. Let's turn to the barriers facing the industry as it evolves into this new world. What needs to be overcome? Perhaps I'll start again with Nav on this.
Yeah, so in terms of barriers, 3 things that I wanted to discuss. Start off with technology, which I think is probably the most matured, in particular from the UK's perspective. If you asked this question a couple of years ago, we probably would have had a different answer. But the journeys are in place, browser journeys, app-to-app journeys, third parties are using them. In terms of the bank's APIs, on the whole, they're stable. Availability is high, and response times that we get back are also, below a second. So technology has matured quite well. The second barrier, though, I think that needs, I guess, more time to see how it would work in practice is customer protection and trust. So I think this is one of the keys to success of open banking. And focusing particularly on payments. So largely what you see in the UK at the moment are person-to-person payments. So it's me paying somebody else, friend or family. There are some cases coming up now where you could pay via e-commerce, maybe pay by bank account or something like that. But the question here is, imagine COVID-19 pandemic that happened or is going on right now, and you had a holiday planned. If you paid that via your credit card or debit card, you would have some form of protection. Let's say that's chargebacks as an example. But imagine if you had that booked via open banking. Open banking itself uses faster payment rails to make that payment. So there's no such protection in place for the customer to get a redress very easily for a payment like that. So I think that's one of the things, amongst many others, that need to be ironed out and tested as it grows to see how that would work. In the UK, we do have a dispute management system that's been set up by the OBIE, but again, it's not tested to scale as it is an early channel. So it'd be interesting to see how that grows. So I think that's one to watch and see how that progresses and whether things need to change to help customers in those sort of situations. And the last thing is value propositions to what what value are third parties providing to customers. So largely in the UK, you see PFM type use cases, so aggregation of all your accounts in one place, which is great. But I think there has to be a sticky point of something that would make you stick as a customer to that app. So seeing your accounts in one place is great, but there has to be an incentive. So it might be a case of your transactions are categorized, or you get offered utility bill switches because there's better offers by looking at your transactions. So that would make you stick as a consumer. And I think currently today, what we have in terms of value propositions is quite restricted, that customers still have to move between their apps because then all their accounts still not in one place because your mortgage, your loan, your investments are not covered by open banking. So when open finance comes along and that comes to fruition, I think the value proposition will expand and it'll be a full PFM where you can see all your accounts in one place. So that, I think, is a barrier that we'll overcome over time. 1, through TPPs driving better propositions, and 2, as open finance comes alive and gets embedded, customers can go to one place to see everything rather than moving between apps still right now as well.
And just on that, I mean, the legal underpinnings for some of that are quite complicated. So moving accounts and doing AML checks and moving assets between accounts is something that's heavily regulated, and the cross-border aspects are quite significant. For instance, the credit card point you mentioned, which is a point of UK statutory law for credit cards, which is not replicated in many other places. So just bringing in Tom on that, and what's your perspective against the framework, the US framework, and the frameworks you're familiar with?
Yeah, and I think I'll dovetail kind of on where Nav left off there. It's this matching the consumer expectation with the reality, and how do you engage with a consumer set that really is not fully aware, nor do they really care about all the different regulatory guidelines, i.e., what regulatory requirements does your bank have for your data, and how might they hold liability in case of a breach versus, say, a third-party fintech that you want to engage with and use a service for. And the expectation is just that it'll work, right? We talk about often a Bluetooth-like analogy when it comes to the technical API standard that is at the foundation of all open banking or open finance frameworks, i.e. you're moving from a world of screen scraping where you're sharing username and passwords to a much more secure API transfer protocol, and yet there's still some barriers. It still might not work exactly as you want it to. Or as Nav said, you may really want to get a full financial picture, but you still can't totally bring in this account or that account. And so what you don't want to do is lose that the consumer drive, if you will, consumer demand that we have going for us because, oh, this doesn't work exactly as I thought it would. And so I think matching those up is important, and doing a lot of the education to help consumers understand why this is still early days, and that you're not just moving around your Spotify playlist, you're moving around the keys to your financial kingdom. And so it has a little different dynamic to it. Yeah, the other thing I'll say that I think is a barrier but also a real opportunity is, it's one thing to be engaged with kind of the early adopter set who is more than happy to engage with third-party fintechs and try out all these different services and apps. But what about the consumers for whom fintech and data sharing is really kind of the difference between night and day in terms of financial services? So whether it's talking about folks with a very thin or no credit file who have the benefit of sharing data to get a better credit score or to get any credit worthiness rating. And so how do you educate those consumers and help them understand that this is a framework that can actually be trusted? That truly takes the entire industry and the entire ecosystem, along with regulators being engaged, to make sure that it's a trusted framework. You don't have an endless runway here to build out open banking and open finance. We need to get this right so that trust is built in for the future.
Yeah, no, thank you. And then Sharon, how do you see this? And that's intriguing. What Tom's vision must be right, but how do you see that being leveraged for your purposes?
Yeah, I think thinking about they might not necessarily be barriers, but I think there's things that we could usefully think about that we have started thinking about in the UK. And like Nav, I've got three, and there's a bit of crossover, I think, with what Nav and Tom were saying. But I think the first thing from a consumer kind of perspective and a consumer representative perspective is around governance. And I think there's a lot of interest in the UK from consumer organisations and representatives about putting consumer interest and consumer voice really at the heart of open banking and open finance, and having that really kind of part and parcel of the governance, and also making sure that it's joined up across all of the different initiatives that are going on, so that we have consumer voice in the places where it needs to be. So whether that's in the open banking implementation entity, or in the digital markets unit, or in the national data strategy, I think it's about making sure that's kind of at the heart of it. And I think that speaks a bit to what Nav and Tom were saying. I think the second thing I would say is touches again on, comes from a slightly different perspective, but it is about understanding that kind of challenge space, as we called it in the Open Banking for Good. And I think it's about really ensuring that you have a kind of grounded innovation approach. So it's making sure that from a purposeful fintech perspective, that you're using that innovation to solve real and grounded challenges, in order to kind of overcome the perhaps mismatch between supply and demand that we have a little bit at the moment. And I think in terms of the Open Banking for Good programme, what it allowed to happen was the solution experts, who are basically the 5 fintech challenges that were in the programme, to learn about the different challenges, financial challenges faced by people who are financially squeezed, from user experts. And those user experts in the Open Banking for Good programme were charity partners who worked with those consumers on a day in, day out basis. But it was also an opportunity, I think, and an important thing to recognise, that it enabled those charity partners who perhaps hadn't thought a huge amount about open banking. It enabled them to engage with the fintechs and learn about the solution space and the possible approaches. And I think for me in particular, it highlighted that there's more than one challenge space. So there's a challenge space for consumers, but there's also a challenge space for non-profits that are serving those consumers, such as credit unions or debt advice agencies. And I think we need to perhaps recognise a bit more in the UK that some of those non-profit businesses might need support to bring this type of innovation into their business to their own benefit and the benefit of their customers.
And perhaps I'm allowed to add, as moderator, one point, legal point. I'm a lawyer of my own, that I think ties into a lot of that, which is that I think there is something also to be thought through in disentangling data that's created by the financial firm and data that belongs to the customer, because there's a lot of effort that goes, and we don't want to disincentivize businesses from innovating and using their own effort. And there's a lot of effort that goes into creating some types of data or presenting it. And I think there is a policy issue, legal issue underpinning this as to whether that's part of this portable thing, and if so, on what basis, and so on, so that we don't actually end up taking things away from people that they've created, which aren't necessarily purely a consumer asset. So now perhaps I can move to what's become apparent from this discussion as the core issue that's going to either make this work very well or it's going to hold it back, which is trust and confidence. Can I ask each of you then what you think needs to be done to engender the necessary trust and confidence and create the protections for consumers that are going to mean that this is taking off, as you say, Sharon, from a bottom-up perspective on the basis of consumer needs and consumer demands? It has to be done on demand side basis. And how are we going to make that happen? Nav?
So in terms of trust and consumer confidence, I think a lot of that would be driven through education. Again, I don't want to pick on the points that Tom raised, but he raised some very valid ones. I think the open banking ecosystem itself in the UK, as far as protecting customers goes, I think it goes very far. There's protecting confidentiality, integrity of the data. Participants that we have to be registered with the FCA or equivalent NCA. They have to ensure they've got the relevant technology in place. They've got to meet all the GDPR obligations as well. So there is a lot of protection in place for the consumers. The consumers themselves, another example is they have access to dashboards in the UK where you can either go into the bank's app browser or the TPP's apps browser, and at any point they can cancel that data sharing. So they have that control mechanism as well. But I think there is so much there that it's a lot for a consumer to take in, and it comes down to how well do we explain to that customer in layman's terms what that actually means for them. And I think that's something that needs to be made clear up front, not to lose them in terms of their loyalty. And I don't think they need to know the whole picture, of what open banking is itself, but I think they need to understand more the use case of open banking, because I think a lot of the time the question is asked of, do we need to educate customers on what open banking is? And I'd probably go a step further and say probably not, because if you go into open banking, you're going to end up in so many different use cases. You can share information, make payments, you can do use cases such as seeing your accounts in one place or credit decisioning. What really needs to be done is actually explain to the customer what actually the value proposition is. So if you share your account information with me, you'll see your accounts in one place. I'll be able to categorize your transactions and give them different categories, etc., which will save you time. Or there's the fantastic features where, if you share your statement data via open banking, we can give you a loan quicker, physical statements. And I think that's the approach that needs to be taken, because I think open banking itself is the enabler, but it's the use cases that need to be explained better to drive the growth of it, because open banking in itself can mean a lot of things to a lot of different people. I think it's the use cases that will bring it to the forefront and grow as a channel.
I'm just pausing on the UK for a second. I mean, I can see legally within a jurisdiction, it's easier than cross borders. And, sort of topically, in the context of Brexit, I suppose, given the UK is a host to the equal top global financial market, open banking is an opportunity to tap into some of those benefits and push them down to the consumers, and join the two up. And certainly within the UK system, I can see the transfers in the way you're describing being capable of working quite well. Tom.
Yeah, so one of the things we talk about the financial data exchange is 5 principles that we think have to be present in any open banking, open finance system. And in all these 5 principles are really aimed at providing a more consumer-centric, consumer-friendly experience. So these are control, access, transparency, traceability, and security. I'll go through those just quickly. So control, again, really putting the consumer at the center of their own data universe. Nav mentioned the dashboards. That's a great innovation that really allows it so that it's not just, oh, I deleted that app, but now I realize they're actually still collecting data. I have multiple points where I can turn that off and on or adapt whatever permission or consent I may have given. Access, which is really, I think, the fundamental issue of who owns the data. Does the consumer have access and the ability to leverage and share their own data? Transparency, and I think this is one that the rubber really meets the road in terms of consumer behavior, expectation, and then when we think about all the different privacy protections in place. So how do you design that enrollment screen so that the consumer does actually pay attention to the things that you're telling them about who they're sharing their data with, for how long, for what purpose, for what duration, instead of just getting the click, 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 yes, I agree, right? So we're always seeking to find that balance between the consumer doesn't want to go through 25 screens, and at the same time, they have that expectation of privacy and data protection. So we think that's important from a transparency standpoint and how you get there. Traceability is key because you want to be able, in the liability framework, to understand if there's a problem, who does that problem exist with? Currently, the banks really hold the bag through the entire life cycle of data. And so trying to get a better sense of understanding if there's a breach, who might bear liability or who might bear responsibility. And then security, ultimately underpinning everything. This has to be a secure process. A consumer wants to know that they're sharing their financial data on rails that are fully encrypted and secure and using best-in-class standards out there to make sure that this works well. So I think those 5 things are really key to providing it. Now the question is, who does that? Is it the industry that does it? Is it a regulatory authority? Is it some hybrid model of the two? But arriving at a kind of solid understanding and foundations for those principles, I think, is really what builds trust in the ecosystem overall.
Thank you. Sharon?
Yeah, I think that's really, nodding away there to what Tom was saying, because it overlaps kind of with what I was coming at it from a slightly different perspective, but I think it's kind of the outcome is the same. And I had there's a philosopher in the UK called Honora O'Neill, who's now a baroness, and she had an idea that if organisations want to demonstrate their trustworthiness, and particularly the trustworthiness of their decisions, they need to be intelligently open. And I kind of read that. It was in a book by Tim Harford, and an economist who writes a lot on some of these issues. And she proposed a checklist of 4 properties about being intelligently open, which I thought could be quite interesting to explore in the kind of open banking and open finance space. And the first one was very similar to what Tom was saying. Information should be accessible, so it shouldn't be hidden away in some, dark secret vault. And it's about making it easy to find out, for example, in an open banking context, can I trust this firm? Are the consents transparent? Being really clear about protections and redress, which is quite tricky in a UK situation, because some things look like ducks, but they're not ducks. So, for example, some things look like a bank account, but they might not have the same protection as a bank account. So sometimes it can be quite difficult to make those distinctions. And I think we have to be really clear about them. Her second kind of property of intelligently open decisions is around those decisions being understandable, so capable of being explained clearly and in plain language. And I think that's very relevant to things like product decisions. So when you apply, whether you're accepted or rejected for something like a credit product, making sure that people understand how their data has been used to make that decision as far as possible. There's also the idea, the third one is that information should be usable. So making data available in a standard digital format, which I think we've been talking a lot about with the standard APIs and having kind of good quality infrastructure. And the final test for her is around the fact that decisions should be accessible. So, can you kind of test what the outcomes are for consumers, would be my kind of interpretation of that in an open banking and open finance context. Which I think is important, because we kind of, I think, have lots of really interesting discussion and debate about what's happening in the sector. But as far as I know, we don't have a huge amount of data about what the consumer outcomes are, and to assess how that's working for consumers. And I do think that's quite an important missing piece of the jigsaw.
So that's fascinating. We've got two lists of key things to watch there, both of which are intriguing. And one common theme, though, and it's picked up in Tom's point on liability, I think was your 4th point. And it goes to what you were saying, Sharon, a little bit as well, is who's doing what and who's responsible for what. Because, everyone, I would hope, thinks that it's generally a good thing to have consumer choice and for consumers to be able to get what they want, and what you're describing sounds very compelling, and I'm sure a lot of people would agree that that's the sort of service they'd like if they can get it. There are obviously national law issues for that may restrict some of this for cross-border purposes, and we will obviously need to work through some of that globally over time, and in some contexts easier than others. But I think the key threshold question, I think, from my perspective, is who's actually responsible if anything goes wrong, and for which bit of it. So if you're the consumer and you have your app provider, are you going to know much about them, and are they going to be capitalized heavily, and is anyone going to regulate that? Or are you left looking to the financial institutions, and then how, because you haven't got a direct contract with them, you will have a direct contract, but not necessarily in relation to the moving bit. So if the app executes on your instruction to move something from A to B and makes a mistake and moves it to C, what's your redress and against whom? Maybe I'm thinking too much like a lawyer, but I think unless we sort some of these questions out of who's responsible, you're not going to have the trust there because people are going to be wondering and there won't be a satisfactory answer to them. Does any of you have a view on that?
I think it's an excellent point. And I think the other issue is around the regulatory perimeter that we have in the UK. So we've got a lot of, so there's a space between the Financial Conduct Authority, the Information Commissioner's Office, and for example, the Advertising Standards Authority, named just three. And they all have memorandums of understanding between each other. But I wouldn't say that necessarily gives us a system of interlocking regulation where those gaps are tried to kind of be closed. So I think particularly around data, I think there's work to be done around how do you kind of make that regulation work better when it is across at least three different regulators.
Yeah, and in the US and the UK, based on the common law system, the starting point would be looking for liabilities, I suppose, and then the regulator could be asked to sit on top and look at capital requirements. But the liability point will need to be worked through in the court systems. And then the question is, who's got the deep enough pocket to deal with some of these if they go awry, and how do you prove if your app has lost the records that you had what you say you had, and how are you going to be able to figure that out, and how far back in time do you have to go to be able to prove that? So I think there are some very tricky, not insuperable, but there are some really quite tricky issues underpinning some of this.
I think it's valid points. Some of them are to be tried and tested. Just thinking at payments as an example, we have the PSRs that govern a lot of this. So if there is an unauthorized transaction that takes place, in most instances, it will be the bank that puts the customer right. But then, depending on how this went wrong, if it was the PISP's issue, then it's chasing the PISP to get that money back. Not saying that we've ever tried that yet, but it could happen in the future. And I think that's where it's a bit grey of how do you then get that from the PISP, and what if the customer was buying a pair of trainers or something, as an example, just taking it one level further, and the trainers came back and they were the wrong size or the wrong color or something. Again, I think consumers, just as they do with chargebacks and stuff, probably will contact the bank first, and the bank would then have to look at their own procedures. If they fall into a specific remit, they would refund the customer. But I think the area that then needs to be tested is where does it lie with the PISP, if the PISP is liable, and then the bank getting that money back from the PISP as well. So I think it's one that needs to be tried and tested.
And Tom, if I can give you the last word.
Yeah, just add on to that. I mean, I think this is an interesting question. In the US and Canada and other jurisdictions where there's not clear regulatory guidance on this question yet, or if at all, most of the liability is determined by these bilateral agreements. Now, I think most people would say these are by far not the most efficient means to distribute on this liability question, but it is the way that the industry has generally operated so far, and so that at least delineates kind of where liability might occur. Now, your question on how do you figure that out is still a tough one, because you do have to set up a system to trace kind of how this data is going and when it's lost, and how do you determine that. And so that's some of the work that FTX is doing now. But I think it also drives an interesting question, again, back to the consumer. As Nav said, the consumer, they just want to make sure they're made whole, right? They don't really care or want to go down the rabbit hole of who do I go find now in this process to engage it. And so I think it's something that there are a lot of potential solutions. I think most people have identified it as an issue that needs to be solved for. And like all these questions, it's a question of is the market better suited to figure this out, or does it require a needed mandate or regulation or legislative change in a given jurisdiction?
So thank you. So I'll ask each of you now to sum up your vision or your views or on any of the points we've discussed. Perhaps I'll take the normal order that I've used throughout. Nav.
Yeah, to summarize, I think open banking in itself is a good thing. It's good to see competition, innovation in the industry from third-party fintechs. I think what that has done in the UK, it's made obviously bigger banks think about how they then offer those services to customers as well. So it's definitely driving innovation. But I think there is a long way to go in the trust and side of things and the customer education. But I think overall, from what I've seen in the data and how this is growing, it's definitely heading in the right way. And open finance, I think, is definitely going to add an extra layer to this, which should lead to better value propositions, and in the end, hopefully with better customer outcomes as well.
Good vision. Tom.
Yeah, so I'll say from an open standpoint, my organization, the Financial Data Exchange, we're really letting the industry define the technical standards. Now, we are neutral, silent on any policy questions, so those might exist. We think that standards can largely adapt and accommodate any regulatory standards or regulatory guidance that is needed within a standard. But ultimately, our view of kind of the consumer expectation, consumer trust, is that none of this really would have come about without consumer demand for these services. That's where the innovation came from. And so I think the real challenge for the marketplace and for regulators around the world is to make sure that you don't stifle or kind of put a blockade on that consumer demand and the innovation that's responded to it. And so kind of finding the balance between those two and making sure that consumers are protected and properly educated and fully aware of all their different opportunities for sharing data, but at the same time aware of any of the potential risks that might be involved as well, is really critical. And I think ultimately it will take the entire ecosystem to accomplish this versus just one industry or one side of the ledger.
It's a complex task. Thank you, Sharon.
Yeah, I'm just going to come at it from a slightly wider perspective, I suppose, because we know in the UK we've got about 12 million people who don't have the skills to benefit from or participate in or contribute to a digital society. And actually that's expected to increase. So I think there's a real risk that unless we have a kind of way to bring those people along on the journey, and I think there's a role for government there in terms of kind of, if people are expected to engage in the digital society and a digital economy, which we're moving towards, then there will be some people who need support to do that. And I think if we don't think about it holistically in that way, there is a real risk that open banking and fintech more generally are going to exacerbate things like poverty and inequality and discrimination in a way that's actually quite tricky to see until it's happened. And so I think it comes back, I suppose, to my point about making sure that, the consumer voice and consumer interests are in there for a whole range of consumers, not just those who've been kind of the traditional core market. I think that would be a really positive thing.
Thank you. I'd now like to thank each of the panelists for their very interesting contributions and the thoughts they've expressed. Please stay with us on the main stage for our next session, which will look at building in trust and design in financial services.